What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is May 22nd of 2021. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I'm going to cut straight to the chase and try to answer the question that is on the minds of millions of people in the cryptocurrency space, and that is whether or not we are in a full swing bear market, expecting further correction in price, and for crypto markets to go silent for the next year or so. Or are we expecting for a rebound? Is this merely just a correction in the overall bull market? So we're going to be talking about that, diving into some really interesting data pieces. And I'm not only going to talk about what I've been doing as of recent, but outside of that as well, showcase to you guys some of the key things I'm going to be looking for in a price analysis without having to use any crazy, wacky indicators. Everyone should be able to do it, okay? So let's go ahead and dive straight into it, guys. Enough rambling. I want to start here by just talking and again providing a bit of a precursor here about how we sort of spotted the correction coming to a degree. Right now, I'll be honest with you guys, I didn't make any changes in my positions. I didn't sell ahead of time, so I'm not trying to come across as a market guru by any means. But the one thing I wanted to emphasize is that this correction, to some degree was very predictable because of the fact that we had these higher lows coming in, right, that were starting to get tighter and tighter and had less spread against one another, right? So the momentum was slowing down on the upswings in price, and also the lows were getting closer. Even though they were higher here, it was starting to showcase a lack of momentum. And then we started to showcase lower lows, right? Lower significant lows and then lower highs. And then once we came back down to that low, this is when it was pretty clear that we were going to probably see some kind of pullback. I think just many didn't expect that the correction would be this severe. Well, the thing about that, though, we'll learn is that we've seen corrections like this in bull markets. This isn't some kind of doomsday correction for Bitcoin by any means. But let's go ahead and dive into it. So one thing I just want to showcase to you guys, if you haven't already, consider following me over on Twitter. I try to post updates on general major moves that I make in the market, as well as any kind of interesting things that I find or kind of thought-provoking things that I sometimes will share on YouTube, sometimes I won't get the time to. But I just want to go ahead and dive through some of the things that I found, because crypto Twitter can be a really big gem of insights if you know how to not take one chart at clear face value and actually just analyze what everyone else is seeing in the market, because you'll see different things than what others are going to see, and it's good to kind of open your perspective to other people's opinions and perspectives. So let's take a look at BTC Archive here, which took a post here from Raoul Pal, who's the founder of Real Vision, which is a finance YouTube channel. They interview a lot of really cool people in the space, as well as some crypto personalities. But one thing that's really interesting here is that Raoul Pal's team actually compared the previous 2013 bull run as well as the 2017 bull run to the existing one that we've been in, starting off from the bottom of the market. And we can see here a really interesting comparison here. Right. So you've got the current Bitcoin price for this cycle. You can see the similarities, overall taking into 2017. Right. This here you can see as well with the current rally going from 2010 to 2013. So just to understand the time frames, guys. This is the previous start of the market here for Bitcoin, where Bitcoin is trading at a couple cents per coin all the way up to $1,000 in 2013. Right, the first major kind of euphoric wave or 3-year wave for Bitcoin against 2017 to this point here. Right, and we can see here that there's a lot of striking similarities overall with these cycles. Right. And again, as we see this kind of period of general consolidation, we have two periods of wave for price going up, followed by, again, short-term intervention and correction, and then eventually a breakout even higher. So if we're comparing this to the 2010-2013 cycle, or at least that phase of Bitcoin's price history, we might be set up for a major upswing going into 2021, right? Let's take a look at the other chart here as well that they have here in the tweet. If we're just taking a look here between 2016 to 2018, another interesting similarity to the current price going back towards May of 2020, right? Started to see the build up in price here, followed by a bit of an intermediate correction. Just to provide some context here, if I'm getting my correction correct here on the blue line, this was when we actually, ironically enough, had the China news, which is supposedly what's dragging down the market, even though there's no ban in China in regards to crypto. They banned ICOs, and this constant. They also did ban exchanges from operating, but to be completely candid, guys, and this is something that headlines won't tell you, money goes where money wants to go, plain and simple. And Asia in general, but China especially, has a lot of new millionaires, and they're looking for ways to get money out of the country any way where you can get money away from the CCP, they're going to be involved in these markets, right? So again, this China news has come and gone. It's been here before in the past. And we can see that we've had a relatively similar correction range here. This looks a lot like a mid-cycle correction, anywhere from 30 to 40%, not a full-on 60% correction that will probably serve as a precursor to a full 80% correction or bear market. All right, let's go ahead and take a look at another chart here. This is from John Wick or at Zero Hedge. Bitcoin 2017, we had two 40% corrections. We had one originally and then followed by a 40% correction afterwards. Everyone thought it was the end both times. True story. What he's basically doing here, and this is what some charters do, I personally don't do this, but it's basically where you draw the actual decline from that high and the low, as you can see here, and he did it with over here as well. So just kind of lets you see the full price action, but he showcases the top to bottom percentage decline. And overall, again, guys, you can see here that just in the last cycle, 40% corrections were normal. It's commonplace because soon thereafter, it gives room for people to start going long and buying at a discount. And again, this gives more room to eventually break past the previous all-time highs or relative highs and break out even higher. All right? So again, just another chart I wanted to show you guys. Now, one thing that's really interesting here as well that continues to play in this theory that we're mimicking the 2017 cycle is a post here from Rolvan. And what he showcased here, it's a little bit complex at first glance, but it showcases the distance between the halving event, which is where we have Bitcoin's supply schedule getting reduced by half for each new block. So instead of just, for simplicity's sake, if there were 20 Bitcoin being issued in a block, there'd be 10 Bitcoin issued from there on out, cutting the supply, right? And again, over time with each of these cycles, we've had a halving reduction of the amount of Bitcoin that are issued per mining block. We can see here that between there, down here to this point of the bottom of the correction so far, it was 373 days, right? And take a look here at the chart here for 2017. Just by one day here, 372 days from the official day of the halving event down to the bottom of the correction, right? Now, is there any reason for this? Not per se. I don't know exactly why this would be the case here in regards to the overall correction, and not to mention as well, we had similar percentage decline. That's another thing they pointed out. But again, overall, it could be here, guys, that it's general profit taking, and not to mention as well, I know there's been kind of rumors of, parties trying to liquidate other parties and derivatives markets, etc. Now, look, whatever it is, guys, there were people who had too much leverage in this case, and someone saw an opportunity to liquidate those positions, or were simply taking profits and happened to knock down more dominoes when they were leaving the stage, right? That's just simply how markets work. And if they didn't have all those people on leverage taking excessive risk, then there wouldn't have been such a major sell-off, probably, right? So again, no matter what the story or narrative is, guys, I don't really care about that. I'm curious about whether or not it's the time to buy or the time to run for the hills, right? Let's take a look here, another Bitcoin archive post here. This is a really interesting one that showcases the price drawdowns from the all-time high at any given point. So you can see these spikes back here from January 2017 to January 2018, where we had 5 times where we went an over 30% correction in price, in many cases going down around 40%, right? You can see here that in a given bull market, you're going to have many of these corrections happening at any given time, right? And again, they're not extremely difficult to predict, but the best thing you can probably do is, instead of trying to trade them, because most people, statistically speaking, will not be able to successfully trade these or predict them, the best you can do is know to look out for those 30-40% corrections. And so long as you can guesstimate that they're going to hover around that range, that buyers are coming in and the price isn't moving lower, that might be a great point to average in if you're sure that it's not going to be a full-on bear market, right? And it tends to be that if it's holding around that 30 to 40% range for a couple days and starts to go back up and the price divergence from the all-time high starts to shrink, then you can start to average in. And I'll talk a little bit about what I've done recently that plays into that. But you can see here in 2021 during the bull market how we're doing the exact same thing. In fact, we've actually had shorter drawdowns in price, which is why we might have had a bit of a harsher correction here, or why at least it might have seemed harsher in this case. Another point here from Ryan Selkis on Twitter, which is that there was 6 30% corrections, 2 40% corrections, and a Bitcoin doubling in 6 days at the end of the cycle in 2017. Again, this is normal stuff, guys, but it's so cool to see different perspectives here that are showcasing the conclusion that I kind of want to build into here, which is that this is not, you know, something to be extremely distraught over or concerned about, right? Take a look here again at the 2017 correction. This visualizes not only the corrections that we just talked about, but outside of that as well, it talks about the gains in between those corrections. 138% move, 106% move from bottom to top, 211%, 164%, 117%, 238%. The best rally of all of it was at the peak euphoria at the end of the cycle, when things started going euphoric and parabolic, right? Crazy moves in price. And let's take a look at the last one here from Benjamin Cohen, another good guy on the YouTube space. Benjamin Cohen showcased a chart here from the bottom of each cycle in this case, not only showcasing the lengthening of each cycle, cycle 1, 2, 3, and 4, going from blue, orange, yellow, and then purple here in the current cycle that we're in, showcases that we're pretty much in line with how we were performing in the same time frame for the 2017 cycle, or cycle number 3. And outside of this as well, the time frame here. I know Ben is one of the people in this case who's really proponent the idea of the expanding cycle theory, and this is something that we had originally kind of been major proponents of at the channel. But the big thing I want to emphasize is that whether you're a fan of it or not, historically speaking, 3 out of 4 times from bottoms in the market, it is expected that the cycle is going to go longer than the previous one. We can see that very, very clearly. The gaps are synchronous, right? Well, we're only here. Only about a little over 800, probably coming up on 900 days into the cycle. I think we've got a little ways to go, even if we were to just follow what cycle 3 did, right? So again, just bear in mind here that all the data here, guys, is pointing out to a pretty obvious fact. That this is most likely, it's not guaranteed, but it's most likely not the end-all be-all of the market. I can tell you guys, as we see in each of these cycles, and you see it in other traditional markets, but especially in a new market like crypto, in all of these cycles, we had what's known as a blow-off top, or blowout top, right? Where you notice that things are just going absolutely euphoric. They're rushing. Everyone's talking about it. Everyone needs to get exposure. They're feeling the FOMO. But this time around, just kind of rolled over a little bit. Had a little bit of stagnation. Kind of like some of these mid-cycles, or these mid-rallies and corrections within an overall bull market. All right? So this is something I want to talk about here, right? The only kind of bearish thing that I could spot within price, and I wanted to kind of play devil's advocate here, was that if we take from the bottom of the correction here, in this case in December 2018, to where we are now, it's been about 122 weeks of price action. Not to mention it's come up here to the logarithmic line of resistance that tends to weigh down price historically. It's weighed down price consistently. Bitcoin's never gone above it. But outside of this as well, if you take what some people would argue is the bottom, technically we had a lower price point here in January 2015. But if you take the low here in August of 2015, here to the peak, December 2017, you've got a near synchronization of the time frame here, about a 1 week difference, or maybe 1 or 2 days off in this case from the previous correction. This is the one solid case I've seen, the one serious thing on the longer term time frames that actually has me concerned to some degree. But to be completely fair again, and I'm not trying to be overtly bullish, guys, the thing here is that a lot of people would say, well, if you're going to use the slightly higher low of where the rally really started here and started to pick up vertically, then you've got to draw it back here for this one as well. You can see that there was these 2 higher lows here kind of during the consolidation period before we started to rally, break out past the all-time highs, and set new all-time highs, right? And those time frames are different. In fact, this showcases that we're only 122 weeks in, or at least to that peak, right? Where it was 152 last time, roughly speaking. And with each cycle, we've been expanding in our time frames from the low to the high. I gotta tell you guys, this is why I'm not fearful about Bitcoin or crypto markets just yet. Now, I want to talk about 2 key things, which is what I'm going to be looking out for in price to be concerned, and outside of that as well, what I've been doing in the interim. So let's just go ahead, we'll dive into Bitcoin's chart, take a look at the daily. As you guys can see here, Bitcoin's been holding up. It's not at the absolute lowest range. We're about $7,000 to $8,000. Actually, technically, almost at $8,000 off the lows here, hovering right below $38,000 per Bitcoin. Right back where we were here in early to mid February. And outside of that as well, the key thing is that we're not absorbently high in this case, right? So what am I looking for here in price? It's the same exact thing that we've been looking for as we've been going out throughout this bull market. We're not using any crazy technical indicators. We're not using some crazy over-the-top market analysis where we're clustering our chart. We want to keep things clean so we can see what price is telling us. What price is telling us. This is all that matters, guys. I mean, it's not that you can't use technical indicators to help you, but for me, if you guys want to know how I look at the market, I like to wait and see what price is telling me. So what I would like to see, and I'll just kind of draw some scenarios here like we did up here. Hopefully we won't be as eerily accurate and stuff. It's usually, I'm not going to claim that we always get it right, guys, but just to kind of showcase as a drawing here, and don't use it as an absolute guide for what price should do. But what we want to look for here is for price to not only hold this base here, right? It's obviously starting to form a higher base here in this case, right? The lows are starting to get higher here and might signal that buyers might start coming in. We want to see a combination of multiple higher highs and higher lows, starting to recoup some of this correction. And we want to see it happen pretty quick here within the summer. It seems like a big ask for Bitcoin to do this, but to be completely fair with you guys, and you guys can do this through TradingView as well, which is what I'm using, take the bar pattern tool here, take it from around the same range we're at right now, right? Copy the price here. Excuse me. Messed up my chart a little bit. There we go. You can see here that we've done stuff like this before. And in fact, it tends to be that when we follow on these corrections in the market, the second go around here, because we've already discovered this price before, we've been in this price range, that it can happen quite quick, right? And again, take my line for what you will. It doesn't have to happen right away. In fact, we could have a period of time as well where we really, as we kind of talked about on the channel, one plausible thing we talked about in the long-term chart was that we were going to have a sideways correction for the preceding maybe summer and fall, and then we kick back up and break past the logarithmic line of resistance. It could happen that way, right? You could have this drawn out over a much longer period of time, but what you want to see is you want to see those higher lows where people are starting to have more confidence here. Oops, I messed up my chart. You can see here, right, just generally speaking, that we want to see those higher lows and higher highs. We want to see price holding up after this correction, that buyers are paying a premium on the lows and the highs for us to continue being bullish on Bitcoin as an asset. Plain and simple. There's nothing crazy needed. Now, let's say, for example, something else happens. We even get a rebound here, but we can't even get past some of these higher lows here. Excuse me, the previous lows in this case, right? So let's say we're going up in price, and we keep getting hit by that point there, and we start to tailor down, right? The chart's probably not going to look like this, but you get the principle what I'm drawing, guys, which is that we can't get past what used to be support, and that's now being treated as resistance. I think it's a pretty clear given here, guys, even if this is a full-on bear market already, that we are going to get a recoup in price after a 40% correction. It tends to happen, right? And what we're going to see here is whether or not we can get past that resistance point, or in this case, previous support, which might act as resistance, likely will, because it's the next significant kind of price range here that we have to work with. And if we face resistance there and aren't able to get up there within a matter of a couple weeks, and we start to roll over, then that might be a cause for concern for lower lows, and possibly retest down towards 20K to conclude the cycle, where we'll probably make support. Right? That's the bear market scenario. What I think is much more likely is that this is a mere correction within the cycle. But we'll see over time. I don't want to sit in my biases, guys, right? Sure, I'm allocated to the crypto market, but I'm not in love with the crypto market in this case, right? I absolutely do love the power and potential behind crypto, but I'm not going to let my net worth be at stake if I think that it's an actual bear market. Plain and simple. I'll be honest with you guys, right? And we can talk about other markets here on the channel as we've done back in 2018. I'm not going to sit here and be, I guess, kind of a FOMO Spartan in this case of making sure everyone's constantly bullish. No, markets have corrections and they also have bear markets. So anyways, just wanted to emphasize that here, guys, doing a pure analysis of Bitcoin here, because Bitcoin will determine the direction of the market. I genuinely believe this. This has been generally historically true. And who knows, maybe we do see a divergence where Bitcoin corrects further and altcoins like Ethereum continue to climb higher. Who knows? Stuff like that could happen. But that'll be a topic for another video. The last thing I want to talk about here, to wrap things up, because I've rambled on enough, is what I've actually been doing. Well, what I actually did, and what I shared on Twitter, is that just early this morning, I had a hunch. I happened to wake up in the middle of the night and decided to place a trade for Ethereum at $2,190. A near 50% clean correction, I think slightly over 50% correction from the highs for Ethereum. And I decided to get again that Celsius loan that we talked about, that I talked about on the channel. I decided to finally make that purchase and got a good sizable chunk of Ethereum. And this is again a point I want to talk about, guys. You'll see a lot of people out there in the crypto space who told you to take excessive risk up here, to take credit and borrow margin so you can have a leveraged position to potentially maximize your returns at the top. When in reality, to be honest, if you want to call it margin, it is technically I'm borrowing credit to buy more crypto, right? At a low interest rate. Seems favorable to me. But along with that as well, I'm doing it at a point where the market's already pulled back. This is the lowest risk period. The lowest risk period where you can go about engaging and borrowing credit and margin. I'm not telling you guys to do that. I'm just letting you guys know, as someone who trades these markets, this is how a mature person uses leverage, especially when there's a risk of liquidation, right? And just take a look here, guys, overall at the kind of long-term chart here on the logarithmic. Right, go ahead and take it to the 2-week chart here. Right. What did we do in the last cycle here on Ethereum? Right. Though not as dramatic as this time around, as we didn't have the big blow off top like we had here, breaking through the previous all-time highs. Right. We came up here, made support on this midline here that served as resistance, support, support, resistance. And though it served as resistance, we broke above it, and now we're coming back down to make it support. I'm already up on the trade pretty decent in the sense of my returns, but it's just the beginning, guys. A small gain here is not what I'm borrowing capital for. I'm borrowing it for a long-term bet. And I'm guesstimating in this case, I'm pretty confident that if we continue to ride through this cycle, whatever interest I owe in that capital, easily paid. My collateral is at a healthy price range when I inputted it to take the loan. There's very little risk that things are going to go down 40-50% more than where they're already at and cause a margin call. That's how you play the markets, guys. Plain and simple, right? I like to buy discounts, I like to ride the broader waves, and I only take profits when I'm confident that we're stepping into a bear market. And practically every major data point, every way you could be peeking at the market, as dramatic as this correction is, it doesn't appear like a bull market, or excuse me, a bear market in this case. In fact, it feels like we're still very much in the midst of a bull market. So, I hope you guys enjoyed this video. Hope you enjoyed the endless rambling. If you liked it, drop a like. Consider subscribing. There's other ways you guys can support the channel. You can always check out the Dash report down in the description if you like this kind of macro, longer time frame analysis, because this is how smart money is trading, guys. I'm definitely not the smartest in the room by any means, but I know how money moves in the market. Larger traders are not looking at the day-to-day, to the hourly, or the 5-minute chart. They're looking at the long-term time frames, and they're getting as many perspectives as they can possibly get. All right, guys, take care. Have a phenomenal rest of your day, guys, and I'll see you all in the next video. Take care, everyone.